When most people discover trading, they see dollar signs dancing in their minds. They imagine turning a few $100s into thousands within weeks, maybe months. They picture themselves posting screenshots of massive gains, quitting their day jobs, and living the freedom they've always craved. But here's the contradiction that destroys 90% of them before they ever taste real success. The very emotion they think will drive them to victory is the same one that will methodically dismantle every dollar in their account. That emotion is hope, and it's killing your trades. Hope feels like a virtue. It feels noble, optimistic, even necessary. After all, without hope, why would anyone take risks? Why would anyone believe in a better future? But in trading, hope is not your ally. It's a silent assassin dressed as a friend, whispering sweet lies when you need brutal honesty the most. Hope convinces you to hold losing positions just a little longer. Hope tells you that this time will be different. Hope transforms disciplined traders into desperate gamblers, and it happens so subtly that most never realize they're being destroyed from the inside out. You're not alone in this. Every trader who has ever blown an account knows the seductive pull of hope. They know what it feels like when a trade moves against them, when the red numbers grow larger, when logic screams to cut the loss, but hope whispers to wait just a little more. Hope promises that the market will turn around, that the pain will transform into triumph, that patience will be rewarded. But hope in trading is not patience. It's denial wearing a mask. The market doesn't care about your hopes. It doesn't care about your dreams, your bills, or your desperate need for this trade to work out. The market is a cold, indifferent machine that responds only to supply and demand, to buying and selling pressure, to mathematical probabilities played out over time. When you inject hope into this equation, you're fighting reality with fantasy, and reality always wins. Think about the last time you held a losing trade too long. You knew you should have cut it. Your stop loss was clear. Your risk management rules were defined. But as the price moved against you, something shifted. Hope crept in like fog rolling over a harbour, obscuring your vision until you couldn't see the danger ahead. You start telling yourself stories. Maybe the market maker was manipulating the price. Maybe this was just a temporary pullback. Maybe if you waited just a few more minutes, hours, or days, everything would reverse and you'd be vindicated. That's where every trader's downfall begins. Not with a lack of strategy or poor technical analysis, but with the moment they choose hope over discipline. Hope transforms what should be a business decision into an emotional gamble. It turns professional traders into amateur dreamers, and it does so with such elegance that you barely notice the transition until your account is bleeding out. Most traders never understand this because hope feels so natural, so human. When faced with loss, our primitive brain searches for escape routes. It manufactures optimistic scenarios and convincing narratives that justify staying in pain longer than necessary. This isn't weakness, this is biology. Our ancestors survived by hoping for better weather, better hunting, better seasons. But evolution didn't prepare us for financial markets where hope can destroy us faster than any predator ever could. The cruel irony is that hope often gets rewarded just enough to keep you addicted. Sometimes that losing trade does reverse. Sometimes holding on pays off spectacularly. These occasional victories create a psychological addiction more powerful than any drug. Your brain remembers the rush of being saved by hope and conveniently forgets the dozens of times hope led you deeper into loss. This intermittent reinforcement schedule is what keeps gamblers pulling slot machine levers and traders moving stop losses further and further away from reality. But here's what the profitable few understand that the losing many never grasp. Trading is not about being right, it's about being consistent. It's about executing a plan with mathematical precision, accepting small losses as the cost of staying in the game long enough for probabilities to work in your favour. Hope disrupts this process because it personalizes what should remain impersonal. It makes you care too much about individual outcomes and too little about long-term process. When hope takes control, you stop trading your system and start trading your emotions. You begin making exceptions to your rules. Just this once, you tell yourself. This setup is different. This trade deserves special treatment, but the market doesn't recognize special treatment. It doesn't give participation trophies or second chances based on how badly you need a win. The market rewards only one thing: disciplined execution of a proven edge over time. The most dangerous aspect of hope is how it masquerades as optimism, Optimism in trading means believing your edge will play out over hundreds or thousands of trades. Hope means believing this particular trade must work out because you need it to. Optimism is strategic. Hope is desperate. Optimism plans for multiple scenarios. Hope clings to one desired outcome and ignores all others. Professional traders have learned to recognize the whisper of hope before it becomes a scream. They feel it tugging at their discipline when a trade moves against them. They sense it in the urge to move a stop loss or add to a losing position. And they've trained themselves to respond to hope not with surrender but with action. They cut losses immediately, not because they want to, but because they understand that hope deferred makes the heart sick and the account balance even sicker. The transition from hope-driven trading to discipline-driven trading is not comfortable. It requires you to accept losses while they're still small and manageable. It demands that you exit trades based on predetermined rules rather than wishful thinking. It forces you to treat each position as just another data point in a long series of probability experiments rather than as a reflection of your worth as a personal trader. This shift is difficult because it goes against every instinct hope has programmed into your trading behavior. Hope wants you to believe that holding on is strength, that cutting losses is weakness, that real traders never quit on their positions. But the opposite is true. Real traders cut losses quickly and let profits run slowly. They understand that preservation of capital is more important than preservation of ego. They know that small losses are tuition payments for staying in the game long enough to capture the big wins. The market will test your relationship with hope every single day. It will offer you setups that look perfect, trades that feel destined to succeed, and positions that seem too good to fail. And when those trades inevitably move against you, as some percentage always will, hope will appear like a false prophet offering salvation through stubbornness. The profitable trader recognizes this moment not as an opportunity to hope harder, but as a signal to execute their exit strategy with cold precision. What separates consistent winners from consistent losers is not their ability to pick winning trades. It's their ability to limit the damage from losing trades. And limiting damage requires killing hope before hope kills your account. It means accepting that being wrong is not a moral failing, but a mathematical inevitability. It means understanding that cutting a small loss today preserves your ability to take the next trade and the next until you eventually capture the moves that make all the small losses worthwhile. The path forward requires a fundamental rewiring of how you respond to adversity in trading. Instead of hoping for salvation, you must plan for reality. Instead of wishing for different outcomes, you must execute consistent processes. Instead of fighting the market with emotion, you must flow with it using logic. This transformation is not easy, but it is possible. And it begins the moment you stop letting hope whisper lies about holding losing trades and start listening to discipline's quiet voice demanding that you cut them clean. The psychology of hope becomes even more insidious when you understand how it rewrites your relationship with risk. Every professional trader will tell you the same truth. Risk is not something to be feared or avoided. Risk is something to be calculated, accepted, and managed. But hope corrupts this fundamental principle. It transforms calculated risk into reckless gambling because it refuses to acknowledge that loss is not just possible, but inevitable. When you enter a trade with proper risk management, you've already accepted the potential loss. You've sized your position appropriately. You've set your stop loss at a level that won't damage your account or your psychology. You've done the math. You understand that this trade is simply one iteration in a long series of probability experiments. But then hope creeps in, and suddenly that mathematical equation becomes personal. Hope whispers that this trade is different. This trade matters more. This trade deserves special consideration because you've done such thorough analysis, because the setup looks so perfect, because you need this win after the last few losses. And gradually, imperceptibly, hope begins rewriting your risk parameters. The stop loss that seemed reasonable starts feeling too tight. The position size that felt appropriate starts feeling too conservative. The exit strategy that made sense begins to feel premature. This is where hope reveals its true nature. It's not optimism about the future. It's denial about the present. When a trade moves against you and hope takes control, you're no longer trading what is happening. You're trading what you wish was happening. You're fighting reality with fantasy, and in that fight, reality always emerges victorious while your account balance pays the price. The most successful traders have learned to recognize hope's signature patterns. They know how it feels when hope starts whispering during a losing trade. They've memorized the internal dialogue that begins with rational reassessment and ends with rationalized destruction. They understand that hope doesn't announce itself with trumpets and fanfare. It arrives quietly, wearing the mask of patience, speaking the language of conviction, carrying the credentials of experience. But here's what separates the professionals from the amateurs. When hope appears, they don't fight it or suppress it. They acknowledge it. They recognize it as a natural human response to potential loss. And then they act in spite of it. They execute their predetermined exit strategy not because they want to, but because they've trained themselves to respond to rules rather than emotions. They cut losses not because it feels good, but because it preserves their ability to trade another day. The amateur trader believes that feeling hope means the trade might still work out. The professional trader understands that feeling hope means it's time to exit immediately. This distinction is not about being pessimistic or lacking confidence in your analysis. It's about understanding that hope and discipline cannot coexist in the same decision-making process. One cancels out the other. Consider what happens in your brain when hope takes control of a losing trade. The rational mind, the part that created your trading plan and set your risk parameters, gets hijacked by the emotional mind, the part that desperately wants to avoid the pain of being wrong. This emotional hijacking doesn't just affect that single trade. It begins to erode your confidence in your entire system. When you allow hope to override your stop-loss once, you've established a precedent. Your subconscious mind learns that rules are negotiable, that discipline is optional, that exceptions can be made when the emotional stakes feel high enough. And once that precedent exists, it becomes easier to justify the next exception, and the next, until your trading becomes an endless series of hope-driven decisions disguised as strategic adjustments. The market has an uncanny ability to exploit this weakness. It will move your position just enough into profit to validate your hope, just enough to make you believe that holding on was the right decision. Then it will reverse with brutal efficiency, taking you deeper into loss than you ever imagined possible. This pattern repeats with such consistency that you could almost chart it. Hope gets rewarded just enough to maintain the addiction, but punished severely enough to destroy accounts. Professional traders understand this psychological trap intimately because they've all fallen into it. The difference is they've learned to see hope as a signal rather than a strategy. When hope appears, it's telling them something important. It's revealing that they've become emotionally attached to an outcome. It's showing them that they're no longer trading their edge, but trading their ego. And that revelation becomes the trigger for immediate action. The transformation from hope-driven to discipline-driven trading requires a fundamental shift in how you measure success. Most traders measure success by the outcome of individual trades. Did this trade make money? Was I right about this direction? Did this setup work as expected? But this measurement system creates the perfect environment for hope to flourish, because it makes every trade feel personally significant. Disciplined traders measure success differently. They measure success by adherence to process. Did I follow my rules? Did I execute my plan with precision? Did I manage risk appropriately regardless of outcome? This shift in measurement criteria neutralizes hope's power, because it removes the emotional attachment to individual results. When success is defined by process rather than profit, hope loses its grip on decision-making. The irony is that traders who eliminate hope from their decision-making actually achieve better results over time. They take smaller losses more quickly, which preserves capital for future opportunities. They avoid the psychological damage that comes from holding losing positions too long. They maintain confidence in their system because they're not constantly making exceptions to their rules. They compound their edge over hundreds of trades because they never let hope sabotage their mathematical advantage. But this transformation is not easy because it requires you to act against every instinct hope has programmed into your trading behavior. Hope has convinced you that cutting losses quickly is weakness, that real traders fight for every position, that successful people never quit. The truth is exactly the opposite. Cutting losses quickly is strength. Real traders protect capital above all else. Successful people quit bad situations before they become catastrophic. The market will test your commitment to this new way of thinking every single day. It will offer you trades that feel destined to succeed, setups that look too good to fail, positions that seem to carry the weight of destiny. And when those trades inevitably hit your stop loss, as some percentage always will, hope will appear with its familiar whispers and seductive promises. This is the moment that defines your future as a trader. Not the moment you enter the trade, not the moment you analyze the chart, but the moment hope asks you to ignore your rules just this once. The profitable trader recognizes this moment as an opportunity to reinforce discipline. The unprofitable trader sees it as a reason to make an exception. That single choice, repeated over hundreds of trades, determines whether you join the small minority who achieve consistency or the vast majority who eventually quit in frustration. The path forward requires you to develop what I call hope immunity. This doesn't mean becoming pessimistic or losing faith in your abilities. It means building an automatic response system that activates the moment hope tries to influence your decision-making. It means training yourself to recognize hope's whispers and respond with disciplined action rather than wishful thinking. Hope immunity begins with radical acceptance of a simple truth. You cannot control market outcomes, but you can control your responses to those outcomes. You cannot guarantee that any individual trade will be profitable, but you can guarantee that you'll follow your rules regardless of how any individual trade develops. You cannot eliminate the possibility of being wrong, but you can eliminate the possibility of being wrong and stubborn at the same time. The traders who build this immunity understand something profound about the nature of consistency. Consistency is not about being right more often than you're wrong. Consistency is about responding to being wrong in exactly the same way every single time. It's about making your mistakes small, predictable, and manageable rather than large, random, and devastating. When you achieve this level of discipline, something remarkable happens to your trading psychology. The fear of loss begins to dissipate because you know exactly how much you're willing to lose on any given trade. The anxiety of uncertainty starts to fade because you're no longer hoping for specific outcomes. The stress of trading decreases because you're focused on process rather than profit. This psychological transformation creates space for something far more valuable than hope. It creates space for genuine confidence. Not the false confidence that comes from a few lucky wins, but the deep, unshakable confidence that comes from knowing you can handle whatever the market throws at you. This confidence doesn't depend on being right. It depends on being prepared, and preparation means having a plan for every scenario, including the scenario where hope tries to convince you to abandon that plan. The most dangerous moment in any trader's journey is not when they're losing money. It's when they're convinced they're about to make it all back. That moment when hope feels strongest is precisely when it's preparing to deliver its most devastating blow. Because hope doesn't just kill individual trades, it systematically dismantles your ability to think clearly, act rationally, and preserve the capital that keeps you in the game. Here's what happens inside your mind when hope takes full control. You enter a trade with perfect discipline, your stop loss is set, your risk is calculated, your plan is clear. But then the market moves against you, and something fundamental shifts in your psychology. The rational trader who created that plan begins to fade, replaced by someone desperate to avoid admitting they were wrong. This transformation doesn't happen all at once. Hope is too clever for that. It works slowly, methodically, like water wearing away stone. First, it plants a seed of doubt about your stop loss. Maybe you set it too tight. Maybe you didn't account for normal market volatility. Maybe the market makers are just trying to shake out weak hands before the real move begins. These thoughts feel rational, even sophisticated. They feel like the kind of thinking that separates experienced traders from amateurs. But what's really happening is that hope is rewriting your relationship with reality. It's convincing you that your analysis matters more than price action, that your opinion carries more weight than market movement, that your need for this trade to work somehow influences what the market will do next. This is the beginning of the end, not just for that individual trade, but for your development as a trader. The market has a way of testing this weakness with surgical precision. It will move your position just far enough into profit to validate your decision to hold. Just enough to make you feel vindicated, intelligent, even blessed by the trading gods. You'll tell yourself that patience paid off, that holding through the pain was the right choice, that you've learned something valuable about trusting your analysis over your emotions. Then the market reverses, not gradually, not politely, but with the kind of brutal efficiency that characterizes all financial markets. Suddenly you're not just back to your original stop-loss level. You're far beyond it, deeper in loss than you ever imagined possible, and hope, which felt like wisdom just moments before, now reveals itself as the destroyer it always was. This pattern repeats with such consistency across different traders, different markets, different time periods, that you could almost set your watch by it. Hope gets rewarded just enough to maintain the addiction, but punished severely enough to destroy accounts. It's intermittent reinforcement at its most cruel, creating a psychological dependency that's harder to break than any substance addiction. The most insidious part is how hope disguises itself as other virtues. It masquerades as patience when you hold losing trades too long. It poses as conviction when you refuse to acknowledge contrary evidence. It presents itself as experience when you dismiss your stop-loss as the thinking of a beginner. Hope is a master of disguise, always wearing the costume of whatever virtue will make you feel good about ignoring your rules. Professional traders have learned to recognize hope's disguises before they become fatal. They've developed an internal alarm system that sounds the moment hope tries to influence their decision-making. This alarm doesn't feel good when it goes off. It feels like admitting defeat, like accepting failure, like confessing that you were wrong about something you felt certain about. But that uncomfortable feeling is exactly what saves them from catastrophic loss. The transformation from hope-driven to discipline-driven trading requires you to fundamentally redefine what strength looks like in the markets. Hope teaches you that strength means fighting, holding on, never surrendering. Discipline teaches you that strength means cutting losses quickly, preserving capital, and living to trade another day. These two definitions of strength are not just different, they're diametrically opposed. When you cut a losing trade according to your predetermined rules, hope will tell you that you're being weak, that you're giving up too easily, that real traders would have held on. But what you're actually doing is demonstrating the highest form of trading strength. You're choosing long-term survival over short-term comfort. You're prioritizing process over outcome. You're acting like a professional rather than a gambler. This shift requires you to develop what I call preemptive acceptance. Before you enter any trade, you must fully accept not just the possibility of loss, but the inevitability that some percentage of your trades will lose. This isn't pessimism. This is mathematics. No trading system, no matter how sophisticated, wins every time. The difference between consistent traders and inconsistent ones is not their win rate. It's how they handle the inevitable losses. Preemptive acceptance means that when you set your stop loss, you're not setting a level where you hope the market will turn around. You're setting a level where you will exit, period. No negotiation, no second guessing, no waiting to see what happens next. The decision to exit has already been made before the trade even begins. This removes hope from the equation entirely because there's no room for it to operate. But here's where most traders struggle with this concept. They think that preemptive acceptance means they don't believe in their trades, that they're entering with a defeatist attitude, that they're somehow jinxing their own success. This misunderstanding reveals how deeply hope has infected their thinking. Preemptive acceptance is not about expecting to lose. It's about being prepared to lose without letting that possibility paralyze your decision-making or corrupt your execution. The most successful traders I've studied have all developed this capacity for holding two seemingly contradictory ideas simultaneously. They believe their analysis is sound, and their trade has positive expected value, while also being completely prepared to exit at a predetermined loss level if the market disagrees. This mental flexibility, this ability to be confident without being attached, is what separates professionals from amateurs. Hope corrupts this balance by making exit impossible. When hope takes control, cutting a loss feels like betraying your analysis, abandoning your conviction, or admitting that you don't know what you're doing. But the opposite is true. Cutting losses according to predetermined rules demonstrates that you understand exactly what you're doing. You're playing a probability game where individual outcomes matter less than long-term edge execution. The market will teach you this lesson as many times as necessary. It will offer you trade after trade where hope seems justified, where holding on appears reasonable, where moving your stop-loss feels logical. Each time you succumb to hope's seduction, you're not just losing money, you're reinforcing neural pathways that make it easier to succumb the next time. You're training yourself to be undisciplined. Conversely, each time you cut a loss according to your rules, despite hope's protests, you're strengthening different neural pathways. You're training yourself to act rationally under pressure. You're building the mental muscle that allows you to treat trading as a business rather than an emotional battleground. This training is invisible to outside observers, but it's the foundation of every successful trading career. The path to hope immunity begins with brutal honesty about your own psychological patterns. You must learn to recognize the internal dialogue that precedes hope-driven decisions. You must become intimately familiar with the rationalizations your mind creates when it wants to avoid taking a loss. You must study your own emotional responses like a scientist studies data, objectively and without judgment. This self-awareness is uncomfortable because it reveals how often emotion overrides logic in your decision-making. It shows you how sophisticated your mind is at creating seemingly rational justifications for irrational behavior. It exposes the gap between who you think you are as a trader and who you actually are when money's on the line. But this discomfort is necessary. You cannot fix what you cannot see. Most traders never develop this level of self-awareness because it requires them to confront their own limitations honestly. It's easier to blame the market, the news, the algorithms, or bad luck than to acknowledge that their own psychology is sabotaging their success. But the market doesn't care about your comfort level with self-examination. It rewards those who face reality and punishes those who prefer comfortable illusions. The development of hope immunity also requires you to change how you measure trading success. Most traders measure success by the outcome of individual trades. Did this trade make money? Was I right about the direction? Did my analysis prove correct? This measurement system creates the perfect environment for hope to flourish because it makes every trade feel personally significant. Disciplined traders measure success by process adherence. Did I follow my entry rules? Did I manage risk appropriately? Did I exit according to my predetermined criteria regardless of outcome? This measurement system neutralizes hope's power because it removes emotional attachment to individual results. When success is defined by discipline rather than profit, hope loses its ability to corrupt decision-making. The irony is that traders who eliminate hope from their process achieve better financial results over time. They preserve capital by cutting losses quickly. They avoid the psychological damage that comes from holding losing positions too long. They maintain confidence in their system because they never compromise their rules. They compound their edge over hundreds of trades because hope never gets the chance to sabotage their mathematical advantage. If you've made it this far, you've confronted something most traders never face. The uncomfortable truth that your greatest enemy in the markets isn't some mysterious algorithm or institutional manipulation. It's the voice in your head that whispers sweet promises when you need cold discipline the most. Hope has been quietly sabotaging your progress, disguised as patience, conviction, and experience. But now you know its true nature. You understand that every time hope appears in your trading, it's not offering salvation. It's offering destruction wrapped in the language of possibility. The moment you feel hope tugging at your stop loss, whispering that this trade is different, that this time will work out, you're standing at the crossroads that determines your future as a trader. The path forward isn't about eliminating hope from your life. It's about eliminating hope from your decision-making process. It's about building an automatic response system that activates the moment emotion tries to override logic. It's about becoming the kind of trader who cuts losses, not because they want to, but because they understand that discipline, not hope, is what compounds into lasting success. This transformation won't happen overnight. Every trade will test your commitment to process over outcome. Every loss will tempt you to make exceptions to your rules. Every streak of wins will make you feel invincible, until the inevitable drawdown reminds you why discipline matters more than luck. But if you can master this one principle, if you can kill hope before it kills your account, you'll join the small minority who understand that trading is not about being right. It's about being consistent. The market will still be here tomorrow. Your rules will still work if you follow them. And your account will grow steadily, quietly, methodically, as long as you never let hope convince you to abandon the very discipline that brought you success in the first place.